Hi everyone, please check the pinned comment and let's go over my bullish and bearish low time frame and new micro Elliott Wave scenarios on Bitcoin. Starting with the low time frame bearish scenario, where we're looking for a three-wave structure in a WXY, which used to be an ABC in my previous video, but now I think that this last move to the upside works better as a three-wave structure in the bearish scenario than a five-wave structure, and I will go in more detail in the micro bearish scenario later. But in this scenario, the most common target area for wave Y is between the 1 and the 1.236, taken with the trend-based sub-extension from the low to the high of W to the low of wave X, and the wick above is no problem. We were looking at this area over here for a long time already, 28.3k, for then a little bit of a move to the downside. You also see there is a potential trading setup over here, but as always, you want to look at your strategy and see some proof of resistance, because price was going more vertical over here. The volume over here, you can see some high volume spikes, so you want to play it safe and check your strategy and be like, okay, what do I want to see to enter a potential short position? Maybe a break of structure, maybe some bearish divergences, maybe wait for a retracement and then some divergences, whatever it is that makes you feel confident and comfortable to actually eventually enter this trade. Now, there was already a potential trade opportunity on the 15 over here, which was for me in the middle of the night, which was a swing failure pattern where the highs were taken over here, the white key line, the wick above the line, the close of the candle below, which then is basically the entry for a swing failure pattern trade. Entry over here, stop loss above the high, and then you are looking for downside. But as price now moved to the downside, most likely, and also no financial advice, but safe is putting that stop loss break even and maybe already hit a take profit one. So that was the opportunity. And then of course, based on your own strategy and your own plan, you can wait and see if there's a potential entry over here for a short or not. We wait and see what price does. In the bullish scenario, we are looking for more upside. So now we're looking at this wave over here to be a wave 1, followed by a 3-wave 2 over here. And then eventually we're looking for a bigger 3 to the upside, where because wave 3 is usually the biggest and longest wave in an impulsive structure, you really want to see volume picking up, right? You want to see volume move to the upside while price is moving to the upside as well. But if we look at the volume so far of this move to the upside, basically the volume that you see over here, and we then check the volume of the rest of the range, you can see there's not too much of a difference. Maybe even you could argue the volume is a little bit lower because of the low end volume that we have in the candles. Like the average amount of volume is not picking up. The average amount of volume was highest over here, one can argue. So that is not really bullish, right? You want to see volume really pick up and not just a single spike, but you want the average amount of volume to increase as well while price is then moving to the upside, where a minimum target for a wave 3 is the 1.618 sitting at 28.9k. Now, it has to be said that because wave 2 retraced all the way to the 886, which is a rare target for wave 2, this scenario, the bullish one, is a little bit less likely from a probability point of view because of Elliott waves and all the rules, because the 886 area is a common target for a wave B or a wave X and a rare target for a wave 2. So therefore, automatically, it is more likely this can be part of a corrective structure instead of a bullish impulsive third wave structure. But it's all probabilities and nothing is 100%. Another reason why this might still be an alternative for me is that this wave 1 is very difficult to count in a nice 5-wave structure. It is possible, but very awkward. So yeah, that is also something to keep in mind. But if price is going to move to the upside and maybe take this high, the potential bullish scenario might become more likely. If we go to the micro scenarios, I have two scenarios for you. So the first one is the bearish one, right? That I mentioned in the medium or the low time frame scenario just now, where I'm looking at this potentially as a 3-wave structure, where this wave Y is then a zigzag in a wave A, B, and then a wave C to the upside, where this wave C is ending on a high amount of volume. And in the previous video, I mentioned that especially in the last couple of weeks, we have seen wave Cs ending with a lot of volume, the highest amount of volume at the end of a wave C, and then price is like slowly moving towards the downside. Not saying that that might happen, but if this is the bullish scenario, you really want to see this high taken, because then this is a wave 3, 4, eventually you're looking for a 5 with less volume in that wave 5. However, the bearish scenario, looking for a three-wave structure in this wave W, followed by a three-wave, as you can see, quite a horizontal wave X, and then that zigzag in wave Y, where a rare target for this wave Y is the 1.618, which is pulled from the low to the high of W to the low of wave X. And it is a rare target, but it is a target nonetheless, and we have seen it more often. And then the 1.618 in gray is taken from the low of X to the high of then this wave A in a 535 structure. You take the 1.618 trend-based fib extension from the low of X to the first high to then the low of this wave B, and then an A, B, C over here, where then you have a rare target for a zigzag, which is one, like, you don't really see that very often actually. Like, you see the wave Y target more often than a zigzag 1.618 target, but again, it is a target nonetheless. Rare or not, it is a target. So this is a scenario that we have to keep in mind, where in this scenario one would expect a bit of downside, maybe eventually a retracement, and preferably seeing some bearish CVD divergences. And if we do go to the divergences and the CVD chart, you can find the template and like everything in my Discord. We do see some bearish divergences, actually, quite interestingly, right? So price is moving to the downside, and you can see that over here in this range, this part of the price action, we made some lower highs, but the CVD line, the yellow line over here, is making higher highs, right? So lower highs on price, higher highs on the yellow CVD, which are bearish divergences in this structure. Now, they already played out because price has taken this low, so these bearish divergences have already played out, but of course in a very bullish scenario, not something you necessarily want to see. However, preferably in the bearish scenario, you eventually want to see a retracement and then maybe some bearish CVD divergences between the high over here and the lower high made. That would be the best case scenario basically, but of course we have to wait and see what price does. And in the more bullish scenario, if we then switch to the more bullish scenario, then in this case you prefer to see bullishness continue, maybe some bullish divergences as well, higher low on price, lower low CVD, who knows, for then a continuation where you at least want to take this high at 28.5k. Now, there is a couple of reasons again why this might feel like an alternative scenario for me. I've written them in the box here as well, and I'll explain. So first of all, in this scenario, the best looking impulsive scenario is a potential 1-2-1-2-1-2, which actually is quite rare to spot. You could also think about potentially this being like a wave 1-2-1-2, or this is a whole 1-2, and then this is part of a bigger 3. So there's a couple of different ways you could count this. However, in each scenario, it's not that nice. So in this scenario, a 1-2-1-2-1-2, you can see the trend lines are diverging. And if you have a 1-2-1-2 scenario, you actually want to see the price action like a 1-2-1-2-1-2. You actually want to see converging trend lines, preferably. That is by far most common, which is not the case in this scenario. Also, if we look at Elliott Wave degrees, then the green count is the higher degree count, then the blue one, and the white count is the lowest degree count. And then usually wave 1 in green is like the biggest, then wave 2 in green is the biggest, and then as the other wave 1-2s are forming, they become smaller in time and smaller in price. But as you can see, this wave 2 is longer than this one, and this wave 2 is longer than this one. So that doesn't really make too much sense, right? And then again, you want to see a new high being made, because currently the highest amount of volume is in this high over here. But if this is high volume move in a wave 3, which is normal, you want to see eventually a new high made, where then this is a 3, then a 4, then a 5, and in the wave 5 you want to see lower volume compared to the highest volume in a wave 3. Now if I quickly remove this, and we then look at the chart as this potentially being a wave 1, then a wave 2, and then this being part of a wave 3, then I have another problem, which is that if this is wave 2, for example, and I actually checked this before the video, and I pull a fib from the low to the high of 1, like I didn't put the count on the chart, but you know what I mean, and then I put the wave 2 Fibonacci targets, you can see that price did not even hit, if this is a potential wave 2, it didn't even hit the 382, and the 382 is already a rare target for a wave 2. The common targets are 0.5 to the 0.786, which is a problem. And also, if I remove this and imagine this over here is 1-2, it's the same problem. This wave 2 over here, if you would count this as a 1-2, did not even hit the 382 fib. So therefore, I can't really count this as a 1-2, like, and then another 1-2, because this wave 2 doesn't hit the 382, which is I mean, it's incredibly rare, right? Even the 302 is a rare target, and making this a 1-2 means that again the 302 has not been hit, which is not something I like to see. And besides, if this is a 1-2 and this is part of a 3, then yeah, in this 3 you would then maybe think like 1, 2, 3, 4, but then this 4 already retraced too deep. So yeah, it's just not that, like the bullish scenario basically is not a very nice, good looking Elliott Wave impulsive structure. Of course, it is possible. Nothing is impossible. We play the probabilities, and preferably, as mentioned as well with the micro scenario, you want to see proof of resistance for a potential short scenario, because still price moving to the upside. There are some high volume peaks, so better be safe than sorry. Profitable strategy. Wait for your entry requirements that I have myself as well. Wait for whatever you want to see on the chart, and then you can potentially enter. That being said, I hope this video was helpful or valuable to you. Please check out the most recent educational update I've done about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.